Okay, so good morning, everyone. We have with us Mr. Nishant Garg, the MD of Maiden Forgings. And thank you all for connecting in the Bharat Connect conference of Arihant Capital Market. The session will be for 60 minutes. Sir will be speaking about the company for around 15-20 minutes, post which we'll open the floor for Q&A. I request participants to put in their questions in the chat box and or raise their hands when the chance arises. I would request Mr. Nishant sir to please start the meeting.
Good morning, everyone. I am Nishant Garg, MD of Maiden Forgings Limited, and the company was started primarily as a proprietary back in year 1989, and we started with the production of carbon steel bright bars as the first product. It was started by my father, who was himself a first generation entrepreneur, and uh, he had a background of a banker, ex-banker, and then he had the legal background. He was an attorney. So post that the company was started, major first milestone came in 2005 when Maiden Forgings Private Limited as a private limited company was formed, and by then we were producing two products, that was carbon steel bright bars and wires. Then the next milestone came in the financial year 2011-12 when entire operations of Maiden Industries, that was the proprietary, was shifted to Maiden Forgings Private Limited, and we were producing those two products, as well as I joined the business during that year, post completing my graduation. And after at that point of time, the total sales of the company, the top line was around 13 crores. And almost every 2 years, like in 2013, we added with some R&D and taking some plant on rent, we started producing alloy steel bright bars and wires. Then in 2015-16, we opened up with the second unit, which was almost 4 times the size of the first unit. And we added on the product of stainless steel bright bars. And then in 2018, we added on the product of stainless steel wire with opening up of third unit, which was larger than both the units earlier. And in 2001 and 2021 and 22 financial year, we started with exports of pneumatic nails. Nails look something like this, which currently we are producing. At that point of time, we started with getting the job work done from outside and exporting it. But last year we installed the full plant, a Taiwanese plant, and we started with the production of these nails just in the last financial. In fact, in the current financial year itself, we started with the production of the nails. It has all 9-10 months that we are effectively producing these. So along with this, we are also producing stainless steel nails in higher margin and higher profit kind of product. These are selling both nationally and domestic. And in this way, currently our facilities are spanning in 3 units, which are located within a 1 kilometer radius in the city of Ghaziabad, Uttar Pradesh. Then we have 3 units that span around 1 lakh at 1,25,000 square feet, and we are producing 8 product lines in total. Like I said, stainless steel, alloy steel, and carbon steel bright bars and wires in each category, as well as stainless steel nails and carbon steel pneumatic gun wheels. So these 8 product lines we are producing currently, and the top line last year was at 221 crore we closed. So almost a 17x kind of a growth during a span of 11 years or so. We are also the last product that we added was pneumatic nails and stainless steel nails, because that is our forward integration. So the primary focus, of course, the top line is the focus, but the primary focus is as to how to create an ecosystem wherein we can gain higher profits. That is the bottom line. We focus firstly on the bottom line and then on the top line. That has been the overall strategy of the company, and that we do by adding on more and more products. Those land into the finished category of steel products. So current, if we talk about the market segmentation, so currently we provide around 40% of our products to engineering industry, wherein customers such as Everest Interarc, Kirby, Fallen, the PV shed builders who make the J hooks, the tie rods out of our steel bright bars. Then comes the motor shafting companies, the shafts that are built for motors, machines, etc. Then the wire ropes industry, multiple kind of filter wire meshes. These are being produced from our wires and bright bars, as well as for the export packaging industry kind of a thing. So these all industries fall in the engineering segment, which contributes 40% of our top line, contributes 40% to our top line. And other than that, 25% exposure is to the auto sector, wherein we are supplying bright bars and wires for products such as the uh, steel bright bar for the steering of the car, as well as multiple bushes and shafts that are made in that are being used in an automobile, be it four-wheeler, heavy vehicle, or a two-wheeler. So multiple shafts are being made from our bright bars, and other than that, like the suspension rods and multiple components are made from our steel bright bars. Then the third segment comes is about which lands at around 15 to 20% is the home durable and hardware industry, home appliances industry. So such as we are supplying TTK Prestige for the top of the pressure cooker, and to certain vendors of Hawkins, then certain vendors of Usha who are using our steel bright bars to manufacture components of mixer grinders, fans, etc. So as well as the locks industry, like suppliers of Godrej based in Aligarh and Jadabad. So we are supplying that to them, and the remaining 10-15% is miscellaneous. It can land in oil and gas, because whatever steel is being consumed worldwide globally, out of that almost 25 to 30% of the steel will be utilized in form of steel bright bars and wires. So that forms our major industry base. And if we talk about nails, then again it is going into furniture industry, which comes in the home durable segment, and home durable segment. And other than that, it is being used in various export houses for the packaging of the packaging material and all. So for the making of the boxes and stuff. So all in all, these are our primary market segmentation, and I have already listed very few of our prestigious clients while telling the segmentation. Uh, Overall, currently we have around 450 to 500 clients, which purchase from us regularly on a quarterly basis, minimum one purchase in a quarter. So we have a high retention rate. There are customers, almost all the customers that we retained back in 90s are still intact with us. So if we talk about three USPs of Maiden Forgings Limited, the first and foremost USP is that we are supplying stainless steel, alloy steel, and carbon steel products within a single roof, manufacturing them in a single roof, which is, as per my research, till now I haven't found any other second company in entire India which is doing the same. Either it's a stainless steel or alloy steel and carbon steel kind of a business, but no one is producing all three types of steel under single roof. So the grade range is very wide and the size range is very wide. So first and foremost is the product range, product categories that we cater under single roof. That is the first USP, and for that we have been awarded recently in last 4-5 years. We have been awarded multiple times for the highest range in our industry. Second USP is the delivery model, wherein like carbon steel bright bars, our the industry parameter is like 1 week to 10 days delivery, or 2 weeks kind of a delivery. We are supplying in 2 to 3 days, that is 48 hours to 72 hours. And this has been created very in an intentional manner, and we are producing all the materials for, and in stainless steel the industry parameter is 60 to 90 days, and we are supplying in 30-35 days. So in a manner, like Domino's is in the pizza industry, for bright bar, wire, and nails industry, we are kind of Domino's of our industry. So that's the second USP that we have, and third USP is that we are producing rounds, hexagonals, octagons, squares, and multiple profile segments. And that too, we are supplying, uh, while producing these products, the main play is that we mold the steel's mechanical properties to make it application ready. So we are having each and every facility that is required in the bright bar industry, from ranging from manufacturing facilities to the testing facilities. Each and every facility we have is within our company, and thus we are able to do most precise jobs that are required specifically in the oil and gas sector or defense sector, or vendors who are making some components for the aerospace industry and etc. So we are able to produce the most precise. We are able to do most precise jobs with the most quality ridden jobs, and that forms the
Yes,
third.
sir. Sir, sorry to interrupt. There's a message
Mhm.
in the chat box asking if you could speak a little louder. The participants are unable to hear you properly.
I'll just give me a second.
Hello,
Yes, sir. It's now very audible.
I'm better.
Yes, sir. Definitely.
So yeah, so as I was telling, I have already taken you through the past, the present. Now talking about the future, like what is currently going on the uh, value addition side of the company. So we are currently working on a strategy for last whole year post IPO. We were listed in on 6th April 2023. That is almost a year now. So this is the first financial year post listing, which we would be completing. So in the current year, we focused on three main pillars. First and foremost was branding. Branding in terms of multiple avenues, like we released our corporate video and spread it well via multiple digital portals. Then we also exhibited in more than four exhibitions last year, and now we are next exhibiting in Germany from 14th April to 19th April. Creating more of more market base for our products and creating more visibility. So we exhibited last year in four exhibitions, domestic and international. This year also we have in plan three, four exhibitions in the next financial year. So these have been two strategies. Other than that, we have also made more linkages. Our marketing team has expanded, and we have made more linkages. Globally and in Indian markets. We also added on a Fortune 500, global Fortune 500 company from the US market just in this financial year. And we are adding on more such companies in the coming time, near future. And so branding has been first pillar of our strategy. The second pillar was creating distribution network across India so that, like till now, we had only B2B products and we were catering mostly to the OEM, not to the distribution network. So now with this product of pneumatic nails and stainless steel nails, we have a good opportunity. Like we recently added on a distributor in South for the first time. We have two, one in Karnataka and one in Tamil Nadu. So we are going with this B2C product. We have an opportunity to leverage, distribution network pan India. And that being said, this will also help in the coming future, like when we will be adding on newer products with a high margin kind of a proposition. So same, the products would be falling in the same product category. So this way, we would be, leveraging the same distribution network to push our newer products pan India. Then the third pillar to the strategy is forming of global alliances. We have already formed a few alliances in US and Europe. and that alliance would be very helpful when we are visiting Germany next month, exhibiting in Germany. So we expect a good order flow from there. Current order book is also approximately at around 30 crores, like we announced last month. So now we have maintained this kind of an average, which was last year at around 15 to 20 crores. So the order book is getting good, better. And these three uh, strategy, that is branding, uh, pan India global net distribution network, and the global alliances. These will form a base for the coming future to push our products in a better manner and reach newer markets and expand our company to newer horizons. That was one part of it. This entire strategy is linked with the marketing side of the company. And other than this, the we have also purchased a new land, which we are suppose we would be announcing today or tomorrow officially. The entire announcement is getting ready. So, which is almost like I said, our plant is planned at in 1,25,000 square feet. We have already purchased the land, which is almost 2 lakh square feet in area, double our current capacity. We made this purchase in February and March. And this we would be consolidating both the plants and expanding the capacity. And we expect to do this by the plant should be operational by October 2024. So this is second part that is currently going on in our company, and this will lay the foundation for future expansions, and also at the same time reducing numerous operational costs and increasing our EBITDAs and net margins uh, in a very high percentage. This would also help us because the lands currently we have, we will be selling them one by one once the plants have shifted. So this will also help us to accrue a lot of it will accrue a lot of capital internally, out of which some part would be for the repayment of debt, and other part would be used for the working capital that we will be requiring for the increased operation. So that would be funded internally. We don't require any other newer, form of capital from anywhere outside. It will be all done through our internal accrual. And this way, we also have, like I announced last month also, that we also have a target that within next coming 3 to 4 years, we should be an A-rated company, because financial discipline has been a core part of Maiden's philosophy and policy since its inception. And in future, we also, along with our top line and bottom line targets, we also want to ensure that we are an A company who has, who can mitigate the economical risk more with a, lower leverage in its balance sheet in a well-to-do manner. So yeah, pretty much that was all from my side. I think I will invite all the Q and questions that you have.
Thank you. Thanks a lot for the brief, sir. So I had a couple of doubts before we take up the questions. The 1 lakh, can you hear me?
Yeah,
You recently acquired a new land, which is 2 lakh square feet. This you will be
right.
integrating it with
Approximate.
this you will be integrating it with the current 1,25,000 square feet, right?
No, 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 no. This is won't be integrated. Basically, the thing is that one of the unit will remain with us. That is the nails plant that we installed just last year, because that has been all overhauled, and that is the parental unit from where we started. The other two plants will be consolidated at one place. That is one major purpose of it, because that will increase the operational efficiencies, as well at the as at the same time it will reduce the operational cost, in a good manner.
So if my understanding is correct, then we'll have two plants consolidated in one older plant and one new plant. So three plants in total.
Right. Correct.
Okay.
No, we are currently 3 plants, then it will be 2 plants.
So the one is the new one, the one currently we are purchasing, and the
Right.
other one will be the two plants merged into one, right?
The 2 plants, see, unit one is the parental unit we are producing maize, all right, which is forward integration, so that plant can be separate. So we are, producing the maize in the same plant. The unit second and third that we acquired in 2016 and 18, respectively, those would be combined into the newer plant that we are purchasing. So that will come around because the land area of these two is around approximately 11,000 square yards. But it can be combined into one in 9,000 square yards because office both have office areas and stuff like that. 9,000 square yard, and we will approximately have 9 to 10,000 square yards free for now for future.
Okay, sir. Okay. So I would now request participants to either raise their hands or put their questions in the chat box. I repeat, I request participants to raise their hands or put their questions in the chat box. We'll take the first question from the line of Mr. Akshada Dio.
Hello, am I audible?
Yeah, audible.
Okay. I just want to understand you have a target of increasing it up, making your revenue by 5 times almost. So I'm just trying to understand how this will go through and how this will look like. Would you have to increase more assets, or are you just
Talking
acquiring
about
more?
that, the target that we have for 2028, that's 1,000 crore sales, right?
Yes, yes.
Uh-huh. Yeah. So see, last year because I can't give any guidances for the future as per service compliance. Okay. So the thing is, last year we had 221 crore, right? Uh, Approximately, because we did all the groundwork in the current financial year, that is about to be over in next 3 days. And post this, we have already acquired land, and we are making it operational. We are targeting to making it operational by October this year, right? So we have the space and space for future expansion nicely. Plus, right now we are doing 8 product lines. We would be adding on few with our own manufacturing facilities as and when, you can say almost at a gap of around 1.5 years. So these product lines will add on. Plus, we will be obviously increasing a little capacity every time, every year for the current product. Like I am doing this consolidation, I am also by 3,000 to 4,000 metric ton, I would be enhancing the capacity. So post that, like first year was we got listed and we were laying the groundwork, and then second year will show. I am just talking second year from the after listing. So we would be showing. We should be able to show tremendous growth. Then at the same time, once the plant is working and operational, our focus is also on the export business, B2B business that we have already started. We have taken order in March, which we would be starting to supply from say July. That is for post bar. Mostly the finished steel products with which can cater higher margins. So we would be acting as merchant exporters over there, and we would be building an entire ecosystem wherein domestic SMEs products can be exported, and with space being made, the entire branding and quality checks and everything would be done by Maiden, and we would be getting like for post bar. Say my vendor can do 200-250 tons per month. I am in future, like from this year, the coming year onwards, we would be getting the contract manufacturing done, like the entire 250 tons we would be purchasing and selling to the export customers that we have. So this way we are building up a model, and at first 2 years will show a growth of say, let's say 50, 60, 70% in our 221 top line, and then from next year onwards it will start multiplying. So we will have 3 years in hand. So this way, in few products being manufactured and added in our facility, and few products getting manufactured at contract facilities. It will be a and it will be the part of our analysis that what products we can get from outside and still enjoy margin and ensure the quality, and what products we will need to manufacture by ourselves. So we would be adding on those products, and this way we targeted by 2028 we should reach that 1,000 crores.
So for the exports ecosystem that you mentioned, so you would be trading them? Is that right?
Sorry?
For the export ecosystem, is my understanding correct that you are actually trading?
No, currently we are manufacturing everything,
No,
and we are
about
expanding.
about the crowns
And
that you mentioned.
for the future export, like I said, the finished products of steel, ferrous metal, that we would be trading like gold bars and stuff, wherein we enjoy a decent net margin of say 8, 9, 10%.
Okay, so how much do you believe that this will be probably a part of the overall 1,000 crore target? How much will be this grams?
I think it should be at that point of time. See, it's very difficult to analyze at this point of time, but it should be around 50%.
Around 50%.
50% of trade this year, and 50% of our own.
Okay. Okay. Thank you so much. I'll get back in with you.
Okay, thanks a lot. Next question will be taken from the line of Mr. Vikas Sharma. Mr. Vikas, you may speak now. I think
Raji,
there
you
is.
are on mute. Raji, you are on mute.
Yeah, am I audible right now?
Yeah, you are on.
Sir, in the last con call, you said that in the last quarter of this financial year, we will be reaching a target of 25 crore per month. So how it is going right now?
Right now, we have reached around 22 to 23 crores per month. That being
Okay.
said, volume is in tune with that. I can't give any guidance over this call. So, like one gentleman has also asked the question for guidance on sales and
Nishant sir, I think there's some connection issue on your
below
side.
the normalized price. So in terms of volume, I think I would, if I, give the pricing of April to the steel right now, we would have crossed, I think, 26 crore maybe, because the absolute increase in our sales volume would be by, say, around 22% vis-a-vis April. So on a monthly basis. So we have the upward side of 25 crore, but due to steel prices being lower than ever, that is at 23 crore.
Okay. From September to this March, so your average was around 21, 22 crore, might be.
At that time, 21 crore. We started, like in last con call also I told, September was the first month that we started achieving 21 crore kind of a sale. And that was constant for October, November, December. And then from January onwards, we kind of in a range of 22 to 23 crore. Which is again,
And
despite
sir,
the February being 29 days month and March has the holy effect, but still we will manage.
okay. And sir, regarding coming to the main part, EBITDA margins, in FY23 we had around 10% EBITDA margin, but in H1 it dropped to 9.09%. So how it is going in this current H2 basically?
That I would be in next coming 2 years it will improve drastically because of all the like I said, the consolidation of the plant and because that will increase our operational efficiencies a lot. The cost of inputs will decrease. For example, electricity cost will decrease by at least I can say 5 to 10% easily. So there are numerous costs that will reduce by having plants at single location. So EBITDA due to that, and secondly, if when we will be giving the accumulated data post, in the results of this financial year, H2 results. The contribution of higher margin products would have increased, so that will also, improve the EBITDA in coming future. And that is the strategy. That's the core strategy. So in coming future, EBITDA are meant to increase. But this was exceptional year because listing happened on 6th of April, and we had the IPO cost, then the entire that, like the branding exercise that we told, that will impact how that, we have at least added 50 new customers, out of which 3, 4 are very important, and which have a potential of giving us large revenues in the coming financial year, because it's like a snowball effect. They have started business with us, they are satisfied with our services, they are satisfied with our product. So they will be increasing volume because they have a huge demand. So they will be increasing business with us. So that will be giving impact on the sale of higher margin products. And at the same time, the branding and certain expenses that were incurred on exclusively on branding and marketing this year were exceptional. So that will reduce over time once we have reached an order. So these are meant to improve.
Okay, sir. Thank you, sir. So we'll take the next question from Mr. Pratik Chaudhary.
Pratik ji, how are you? Mute हटाओ.
All good, sir. आप कैसे हो?
एकदम बढ़िया.
Sir, this the 30 crore order that you mentioned, which were, usually
Go to
your order book is it for 1.52 months, or is it for like 1 month?
See, it is for, it's not, you cannot say 1.5 months or 1 month, because it's about the processing time. Like it also includes order for stainless steel, which, we can deliver. It's upon our delivery. If we can deliver within a month, it will be maintained, it can be set for 1 month. But the point is, it doesn't have all, we don't have all the raw materials in our facility, and the raw material, incoming raw material will take say 30 days or 35 days from a steel mill to come to us. The products that we deliver in 35-40 days, because our processing time is 2-3 days. So you can say it can go up to 45 days, but the order book is, you can deliver ASAP out, you can deliver.
Right. And since from the new financial year, we'll be moving, or we'll start the process of moving to the new land that we have bought.
Right. Right.
So what are the challenges? Do you see 1 or 2 months of lost sales?
I understand your point. It's like, how well you strategize, plan, and execute it. So the strategizing and planning has already been done. Like I said, that we would be expecting, say, capacity in first phase itself by, let's say, 3,000 or 4,000 metric ton per annum. So of the current product. So what is happening is that when we will be shifting, we have, like, I think Pratik ji, you have already seen our plant. So we have
Yes.
multiple lines of each and every product, right? So say one line is already installed, a new line, and we start production on that, and then we will be shifting one line after another. So there won't be any production loss, and already we are operating. I think this year we have, so approximately we are operating at 74%, 75% right now. So we still have
Right.
idle capacity, so we can, anytime reach the, for example, one machine is decommissioned and it's commissioning on another plant. It will take, say, 4-5 days or 1 week's time to get commissioned over there. So in the meanwhile, we can operate whatever installed capacity, we can operate it at 85% kind of.
Okay. And what
So,
would it be the percentage increase
Pratik
in
sir,
capacity
Pratik
at
sir, I
this new
request
plant?
you to please come back in
Yeah.
line. We have a lot of questions today.
Okay, fine.
We'll take the next question from Mr. Rohit Balkrishnan.
Just 2 questions, sir. One was, you said that you have a target to reach 1,000 crores. So if I look at your history, last 4 years, whatever numbers are out in the domain, public domain, you've hovered around 200 crores of sales. So uh, and you've increased your product basket in this time as well. So what gives you that confidence, or where is that conviction coming that you probably
Really,
your
I
scales?
will tell you, I have been into business from 2011-12. At that time, the top line was 13 crores. These, the 3 years have been, exceptional in terms of, firstly, if the 2 years out of this were the COVID year. Okay, wherein the sales for first quarter respectively, I am telling 2021, 2020, 21, and 21-22. Respectively, the first quarter sales for both these 2 years was first year was around 3.5 crores as the plants were under lockdown. And for the second year, it was at around, I think the first quarter sale was at around 12-13 crores. So those two things decrease, which should have been at a nominal level at 50-55 crores. So that was one scenario wherein we could have reached around 250 crores of sale, but we didn't. Then coming to the last year was again exceptional for us because we were going through the IPO process. We were realigning everything in our company, restructuring everything in our company. So there were lots of things. Plus, 2021 was the last year when the steel price boomed. And after that, it has been always decreasing for last 3 years. The cycle next 3 years are very bright for steel industry. Obviously, I think everyone should be aware of the market reports and everything. So last year was again exceptional due to we were getting into listing. My father also passed away just before that. So there were multiple things for which were happening, and we were preparing for the future. I have told in numerous of my calls and meetings that we have created in last 2 years, we have created base for at least next 5 years, and that would be very much visible from the coming financial year. I think H1 result of 2024 will be showing a huge impact on that. Like I said, almost we have increased this year also. If we talk about the volumes would be increased by at least 20% vis-a-vis last.
Got it. So this 1,000 crores you're saying by which year? Sorry, just to
2028.
2020.
That is the target of.
Sure.
I'm not giving any guidance.
Yeah, no,
It's
I understand.
internal target that we have placed, and I'm just discussing
No,
it.
fair. No, fair. No, so I'm new to the company, so pardon my ignorance.
Okay, thank you, Mr. Rohit sir. We'll take the next question from the line of Mr. Hardik Parekh.
Hi, good morning, Ms. Anji.
Good morning, Abhi.
So I missed, the first part of this interview, but I still wanted to ask this that we were working on, some pilot orders from US and some big clients, right? Probably get trial orders from them. So how is that going on?
That is going on super fine. That we have already started with the commercial production of stainless steel and pneumatic wheels.
Okay, and so we're expecting that revenue to be sticky, right? That revenue to repeat on and on.
That will increase because trial and almost 6 months of those commercial production has started. So we are still on, let's say, 25%, 30% of the capacity of the new product still. So in the coming year, I expect we should reach at a 60-70% in the entire year. Year. Yeah.
And I thought we met around 50 odd clients, right? I think you only went and met them. So, how many trial orders have we gotten till now? Is that something you can share?
For what? I'm unable to understand, the trial orders for what? If you're talking about pneumatic, we have already.
Yeah. Nails. I was talking about nails.
We have already started getting regular orders, not just the trial orders.
Okay. Perfect. Thank you, Nishant.
The guy from Arihant Capital, I forgot.
Yes, sir. I understand your point. So I would request the participants if they have any remaining questions to mail it to us, and we'll get it clear from Mr. Nishant
You
sir.
can mail it to Arihant Capital. You can also mail it to
Yes,
our
sir,
investor.
we can hear you. Please go ahead.
So I would request the participants
You
and
can just let me, sorry to interrupt. So you can just send us to the investor relation ID of our company, which is available on our website, and we respond very quickly. 24 working hours, you will get the reply. So you can mail it because I already informed Aryan Capital that I am having a very important meeting post this. So I have to leave by 10:45. So all your questions are welcome. Please send it through the email or get connected to me on Twitter, and you can send it over there.
thank you, sir. Thank you, Nishant sir. And I would like to thank the participants and thank you
Really
for
sorry
joining.
for this early leaving, and thank you so much.
Thank you for joining in the Bharat Connect conference. Thank you, sir.
Investment in security market are subject to market risk. Read all the related documents carefully before investing.